what I mean? We're live. All right. So we're not going to talk about kombucha. We're going to talk about the real estate market with my friend. And earlier today, I realized that you have the same amount of syllables. So I was singing your name in the tune of Ozzy Osbourne to Mr. David Childers, bah, 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 right? But hey, we're not here to sing. David, how are you doing?
Doing well, doing well. It's good to be back again and talk a little bit about the market, talk about what's going on. So grateful for that and grateful for the chance to be together today, Johnny.
Yeah, and the market is doing good in every way. Yeah, I just try not to watch the news because they always make it, oh, this, that, the other thing. The reality, the fact is, I know somebody that put $3.5 million on the contract last month, February, right? Yeah. So there was 3.6 million available to her, right? You got to just keep grinding it out a little bit. And yeah, man, I feel bad for some of you folks that are out there working with the first time buyer and two nickels to rub together. And,
yeah,
they're putting all their money into this and they're competing against 32 other offers. And I'm going to just give a quick shout out off topic a little bit. On 3/16, which was Tuesday, NAR released a new report of generational trends for buyers and sellers. Y'all should go get that. Do a quick Google. It's free to you. It's the best thing NAR does, in my opinion. That's tangible that we can see. I'll go in there and see what the habits are. See what's in there is how much the down payments were, who paid the most amount of cash, and you can see it across the generational trends. Like exactly as title. So get in there and learn that. But we're not here to talk on endorse NAR. We're here to talk about the real estate market. We're talking about rates, and we got some other cool things that we're going to talk about. So I like to just give you the microphone because it's so much easier.
Well, Johnny, you do such a good job of setting it up, and then we'll talk about it. We'll talk about what this means for agents, but there's a lot happening. Probably rates, one of the biggest things that's being talked about in the market right now, starting to creep up, as the economy improves. Good news comes out about economic improvement. So we'll talk about a little bit about that today. We'll talk about builder confidence that came out recently, and my goal is always, Johnny, to give everybody the expert advice or expert data so that they can give their clients the best advice in buying or selling a home. So I know the chat's open. Johnny and I'll take a look at that. So put questions in there as you have them. That'll help us. We'll try to answer those. If I don't know the answer or don't have time to answer it, we'll answer it at some point. Well, let me start off and share a couple of slides here. As of yesterday, the average 30-year fix, Johnny, going up to 3.09%. Sam Cater, the chief economist at Freddie Mac, says, as expected, rates continue to inch up, but are still hovering around 3%, keeping interested buyers in the market. However, residential construction, and we're going to talk about that in just a minute, has declined for 2 consecutive months, and given the very low inventory environment, competition among potential home buyers is a challenging reality, especially for first-time home buyers like you just mentioned, those trying to get into the market. So, experts still saying inventory is coming back to market. Residential construction, I'll unpack that in just a minute, but those that didn't sell, those that are buying new construction, those that are affected by the economic downturn will be the areas that inventory is going to come to market this year. If we put this 30-year fixed at 3.9% into perspective, I built a graph here. The research team at KCM gave me this. Going back to January 2019 shows where we're at. Still in a very, very good place for long-term financing, and I think sometimes even in our business, we get, concerned rates are rising. Yeah, we're at 3% right now. Let's realize that. And even though rates are rising, it costs more, and they're forecasted to rise this year, but still very, very good financing. It brings me up to a topic, Johnny. I think sometimes in our business, whether it's us, whether it's the clients we serve, sometimes we look at this, rates are rising. I can't find a home. There's this information out in the market. I wanted to bring kind of a snapshot of where we're at in the real estate market right now, just to underscore how well the market is performing. January and February of last year in 2020 were 2 of the best years in real estate we'd seen in 10 years. And where we stand today is showings are up 55% over last year. Purchase applications, meaning those sitting down applying to obtain financing, that's up 5%. Pending deals are up 13%. Existing home sales up 23% over last year. And this is before we get into the, the downturn or the pandemic or anything. And new home sales almost up 20%. What is the issue? The issue is inventory, but we're selling more homes, meaning, supply is coming into the market. It's just not having time to become inventory. It's not sitting on the shelf, or it's not sitting long enough where it can actually raise the amount of inventory across the country. We ended February with 1.9 months of supply in this country. Inventory is certainly maybe lower or higher in the market that you're in, but we need more inventory. But I think it's important to look at these numbers as we look at the market and we say, gosh, I can't find a house for the clients that are trying to find one, or whatever the case may be. I can't get these sellers to sell. That the market is doing very, very well. And be careful what you tell yourself about it, because these numbers just prove that. Showing Time came out and said it's clear that buyers decided to come out in January instead of waiting until the spring to shop for homes. And across the country, I just mentioned this. Year over year traffic up over 50%. You can see it across the country, highest in the West. If we look at this by just strictly a bar graph type scenario, this is what happened in the last year. We dipped down during the pandemic, and then we've continued to grow and rise, sustaining a level above where we were this time last year. And you can just see it visually right there. And so I think it's important to remember that as we look out over the market, Johnny, and what's happening, that there are people that are active. There are folks that are out there looking, and quite a few of them across the country as we head into the spring.
And, I think the important thing to take away from what you just said there is that the market is phenomenal. And while there might be lack of inventory here, this, that, or the other, the market's still phenomenal. You have an amazing opportunity. You're no longer an order taker. You've been an order taker for the past couple of years. Now you have to be an order maker, right?
Yeah.
You got to work a little. You got to work your magic a little bit. You got to go find the listings. One of the biggest issues is, we'd love to sell and cash out that big sum of money, but where are we going to go, right? So identifying these people, but finding out what their habits are, right, is a very interesting thing. Because if you look at who is moving to different areas, are they coming from your area? And to be able to capitalize on that with the knowledge. What are we seeing out there as far as, I know we wanted to talk a little bit, rates are going, market's good, builder confidence. What's going on with builders?
Yeah, it's probably one of the big, I don't know if you saw the headline, builder confidence slips. I think a lot of times, Keeping Current Matters, we took a quote from the Wall Street Journal that said headlines do more to terrify than clarify today. So I want to help maybe clarify that as you look at what builders are doing across the country. So let's take a look here. Builder confidence still in a very good place, but slightly down over where it was towards the end of the year. Came out at 82. It's a survey of the National Association of Home Builders, their members, and what they see. And really, this one slipped based on construction cost and mortgage rates. And if you break that number down, there's really three things that go into it from the National Association of Home Builders. The Housing Market Index gauging current sales conditions fell 3 points to 87. So current sales conditions, they're seeing the headwinds of additional supply cost and rising interest rates. So that started to fall. But the component measuring sales expectations in the next 6 months increased 3 points to 83. So their outlook is, things that are coming are getting even better, and the gauge charting traffic, held firm there. So my point there, Johnny, is in builder confidence and what we see in headlines. Look beyond that to say what really happened in that, because the headline is builders are less confident. The index fell, and when you start to look at it, it paints a different picture about what they're seeing. Yeah, costs are rising. Yeah, interest rates are rising, and builders are concerned, but their outlook for the coming year is still positive and growing. And that's really the main takeaway from that report.
Sure, man. I think if you're going into contract with a builder now, you're not going to get into your house until much later, right?
Yeah.
because they have their reservations in place. So it will be interesting to have this conversation a year from now and see
Yeah.
what happened, right?
Yeah, I'll show you another very good leading indicator for builders right now. Year over year increase in single family building permits as we stand right now. The U.S. year over year, 20% more permits issued for single family residences across this country at this time than as compared to last year. So that's that leading indicator. More homes coming to market. And builders, I would say, are extremely confident. So why is this important right now? Because the challenge is, where are we going to find a home? And I'm going to go back to those three areas. Builders are building, and I would remind clients that permits are up 20%. Those are coming. Those affected by the pandemic and forbearance, they will start rolling off forbearance this year. Those are coming. Those that decided not to do something, people are feeling more and more confident in the economy improving and being able to get back out, states reopening and doing that safely and all of that. As that happens, people will make a decision to list their home that didn't do it last year. So I think there's a lot of positive news coming about the housing market and inventory. And it wouldn't surprise me if we were back at a place where we've got inventory coming to market and people are going, we got too much inventory now. There's more coming. But
yeah.
I think we're going to see that.
So I don't remember if it was 2006 or 7. It might have been 2007. Maybe it was end of 2006. One of those two periods. It was like everything was going like that, like a roller coaster. And then all of a sudden, that moment where there's nothing, and then it was free fall, right? So I don't think we're at that point yet. But I mean, that there's a lot of factors that were different then than now, but we could still have that. Oh, too many homes. Now all of a sudden prices drive, rates go up too much, right? Right now, rates are historically low. If you got under 3, wow, you made history. If you're at 3 point, whatever you had mentioned, 09.
3.09, call it 3 flat. Yeah.
What was your first interest rate? Mine was 13.85 or something.
Well, yeah, it wasn't that, but when we bought our first home, which was about 20 years ago, it was right in around 2000. I think it was 7.5. I think it's where we were. And you start to look at interest rates over time, and what do we know? For the last 10 years, the government's been involved in buying mortgage-backed securities. What's pinning rates low now is the government's involvement. But I'm seeing anywhere from Goldman Sachs to the people in our business forecasting rates this year. And as we have updates to what forecasts are, I'm going to bring those. I just they update those sometimes monthly, sometimes quarterly, depending on who the forecaster is, saying somewhere between 3.5 to 3 3/4 this year. They're going to be upticked. And I'm not here today to say, interest rates are going to head to 3 3/4. Don't hear that. But here's what I am saying. It's not going to be 3.09%.
Yeah.
Really about doing something, now is the time to do it. Yeah. And if you're talking to your cousin that bought something in December at 2.65 or whatever the rate was at that time, they got a better deal. And the economic improvement in this country is going to drive rates, long-term financing higher.
Yeah, I think FOMO is driving some people's decision too, right? And Andrea put it here. Andrea, depends on, we might call you Andrea at my home. But anyway, part of what I'm finding is sellers are ready to sell but can't find a home what they want. And that's real.
Yeah.
And I think my suggestion to agents would be, this is where you got to really become a salesperson. This is where I made a lot of money mailing to neighborhoods saying, I have somebody that wants to buy in your neighborhood. I did, specifically your neighborhood. They live on this road. They want to live on this road because that road's busy. And I made a lot of money that way in double-ended sales, because people would tell me, if we can find, because this isn't a new problem, right? This lack of inventory thing has been kind of kicking around for 2-3 years. It's just real prevalent now because the rates are so bloody low that even more people are out there looking. It's like Pareto's law, right? The 80-20 rule. Now all of a sudden that 20% is really happening. But this is where you got to pick up the phone. This is where you got to run an ad, do a video. This is your opportunity to stand out head and shoulders above the rest with this information going right over your screen, right over your right shoulder or left shoulder, just like a newscaster would, right?
Yeah.
And this is what we're doing, and this is what we're talking about, and this is why we need to sell your house. How long is that equity going to be up? You're thinking about moving to Florida? You're thinking about moving to Arizona? You're thinking about moving to South Carolina? I can help. right?
And I think there are a lot of people with prices right now thinking this might be the time. I think that's a logical thought. And Andrea, I see your comment in there. I may have mentioned this last time, but about 2 weeks ago, Johnny, on the KCM blog, you can go to kcmblog.com and see this. We wrote a blog about the number one thing that every seller has in today's market, and that is leverage. They are in the driver's seat. So that would be my word to those that are selling. Go grab that blog, put it out there, and think if you're thinking about selling and you don't know where you're going to go, you've got leverage. You're the one that holds that opportunity. Leanne, I see that it's KCM, so Keeping Current Matters. So kcmblog.com. You can go to keepingcurrentmatters.com and find the blog again, but kcmblog.com. The other thing, Johnny, you talk about mailing and talking to people. Let me show you something that's a great mailer. I got an agent that I don't know mailed to us at our house with some KCM content just a few weeks ago. It was very interesting. Yeah, it was great. I loved seeing it. But going back to that, what you just said, the home equity that people are building up in this market is skyrocketing. In the last year, the average gain in equity of mortgaged home is just over $26,000.
Wow.
The current average of equity on a mortgage home, according to CoreLogic's, $204,000. 38.2% of the homes in this country are owned free and clear. They don't even have a mortgage on them. And equity has increased in this country 16.2% to over, a number over $1.5 trillion as prices have risen. So why is that important right now? The question with a lot of these people, you mentioned somebody thinking about moving to Florida, thinking about doing, advancing, we were going to wait a while to buy this home or to move to this place, thinking, you know what, we're going to leverage this equity that we have now and make that move. Interest rates are great. And I think our job is to go out there and have those conversations and show people how we can help them do that.
Yeah. Basically what you're saying is all the equity that's available out there in the country is basically equal to Jeff Bezos.
Absolutely.
We'll not have to use him as new measure of money, right?
That's a great call. Yeah.
So what are we looking at? I know Dan is always, or Jake always gives us the hook, so I'm waiting for that. We got 10 minutes left. I know that we wanted to talk about some forbearance kind of stuff. Do you have anything else, or is that the last thing that you wanted to go over?
Yeah, I have one more slide, and I'll say, forbearance continues to, maybe next time we're together, Johnny, I'll do a full update on forbearance. We'll look at that. I'll tell you the number of people dropping in forbearance. We can continue, to expect that to happen as people come off of it. And starting to look at numbers of, okay, what is that going to look like as people come into the market that have a need to sell and have been affected financially. But the Urban Institute published something that I found very, very interesting in the past week, and I'll share that with you, because this goes back to what we've been talking about. Those that are concerned, hey, all these people can't make their mortgage payment. What's going to happen, and what are what's going on with that? According to this report in the Urban Institute, it's a quote here. The typical deferred amount while in forbearance is $6,000.
Okay.
I'll read that again. The typical deferred amount while in forbearance is $6,000 of accumulated mortgage payments. I'm not saying that's a small number. That's a number that is significant and has to be repaid. We've talked about how they're tacking that onto the end of the mortgage. They're finding workouts for people that need workouts. But what I am saying is a lot of people are going to give that, depending on their family size, potentially in a check this weekend in stimulus.
The stimmy.
And they go on to say accounting for about 2.1% of the implied home value at origination.
Yeah.
This percent likely represents an upper bound since the value of most homes has increased since closing. So those that are affected, Johnny, they have options. These numbers, again, I was encouraged by that to see $6,000 being the typical or average amount that is in forbearance right now. Not saying it's not significant, it is, but I think it's something that banks are willing at this point to say, how do we get through this? How do we not go into a distress sale? If you need to sell, you should have the equity to be able to sell. And that's a good thing for those families that are in that situation. They can put a little bit of money in their pocket and hopefully weather the financial storm that they're experiencing. So more and more information to come. And next time we get together, I'll bring a full update on forbearance, because it's going to continue to be something that's talked about. It's going to be in the news. You know, is this moratorium for foreclosures is lifted? We're going to see foreclosures rise. There were people that weren't foreclosed on last year that, you know, in the typical cycle of real estate, you know, would have been. So something we're keeping on top of it, keeping current matters.
So we all heard the term aha moment. And I think Gary Keller coined that one, or made it popular anyways. But that was just an aha moment for me. I never thought or contemplated the forbearance amount. I've always thought, oh, $250,000 house, right? So when you look at it as 6,000, yeah, $6,000. I mean, nobody just wants to burn $6,000. But if we all had to come up with $6,000 and we had 30 days to do it, I'm pretty sure we'd be able to find a way to do it, right? So it's not an amount that's unattainable.
Right.
With 250 is unattainable. So I just had a paradigm shift of what that whole realm looks like, and it's not not as dismal as I would think.
Yeah, and I think that's what's going to come out about forbearance in general. You know, is we've never faced something like this in you know, housing. We've never had a tool like forbearance to help weather the storm. There were opinions on it, you know, going into it. We shouldn't be doing this. We should be doing that. All of that, and I think we're going to learn a lot from it as an industry as we go forward.
Yep. Well, we're about to get kicked off, so let's just wrap this up and say it again. How do they find Keeping Current Matters and connect?
Yeah, you can go to trykcm.com. I'll put it in the chat here if people need that. We're out here to support you, to give you this information, to be the expert. That's why we exist. 30 people that support this mission, whether they be researching, writing, developing all this content, is for you to be the expert in your market. That's why we do what we do.
And if you want to level up your conversation with attorneys and accountants and other professionals of your community, you're going to want to be equipped with this information, because they're kind of equipped with it, or they're at least staying in touch with what's going on in the news. So if you're able to come and have that conversation as a trusted local expert, that elevates you. That's everything we're about, is making you stand out, be that trusted local expert. You can do that with data. You can put out, you've got a mailer. I've seen it posted in multiple different groups. Be smarter than your competition and stand up. Anyways, David Childers, I hope you have a fantastic weekend. To all our listeners, thank you for being here.
Always a pleasure. Thank you, Johnny.
Peace out, everybody.